Hello everybody, this is Lara with your end of the week video for the S&P 500 for the trading week ending Friday 5th of March 2021. The pullback continued lower as a triple zigzag. That was an alternate wave count. It had to be because of the rarity of the structure, but the double zigzag was invalidated and price continued lower. It does look like it may be over. We do have a bullish signal from the AD line and inverted VIX at the end of the week, and so the structure may be complete. Another pullback within an ongoing upward trend. If it does continue lower, then next support may be the 0.382 ratio at 3667. But if I've got it correctly labelled at the lower time frames as a triple zigzag, then it shouldn't continue lower because 3 is the maximum number of corrective structures within a multiple. Elliott Wave analysis first, classic analysis last. The S&P is pretty obviously in a bull market, but markets don't move in straight lines when they trend. There will be pullbacks and consolidations along the way within a bullish trend, and this is absolutely no exception. So far, this swing low for this week remains above the prior swing low. The series of higher highs and higher lows remains intact for the S&P. I'm drawing a best fit channel because it's been quite useful, particularly for resistance. Draw it from the end of what I've labelled here primary 1 to the end of intermediate wave 1. Place a parallel copy on the end of primary 2. If we do see a deeper pullback continue, then I would expect support about the lower edge of this channel, and again when price reaches the upper edge it may again initiate another pullback. Intermediate 2 may not move beyond the start of intermediate wave 1. The bigger picture for the S&P sees a bull market beginning in March 2009, which I'm labelling Super Cycle Wave 5, to complete Grand Super Cycle Wave 1. Within Super Cycle 5, which is unfolding as an impulse, 3 is off to the left of the chart, 4 is seen over here as an expanded flat correction, so this relatively brief bear market down to the lows of March 2020 is seen as wave C of an expanded flat within cycle wave 4, and here cycle 4 ends and cycle 5 begins. I know there are wave counts out there that see the fourth wave as an expanding triangle, but they are much rarer structures than expanded flat corrections, and if you see it as an expanding triangle, then it has an even longer duration and so worse proportion with its counterpart second wave, because it's the proportion between second and fourth waves that gives an impulse what we call the right look. And here's an absolutely beautiful example of an almost textbook perfect impulse. At minor wave 2, or this correction I'm labelling here minor 2, lasted I think 14 sessions, it's a zigzag. Minor 4, an expanded flat, also lasted exactly the same duration, perfect alternation between 2 and 4, perfect proportion between 2 and 4, and it gives from this low to this high, it gives this upward movement here an absolutely perfect Elliott Wave 5-wave impulse, looking almost like a textbook diagram, or as close as you're ever going to see. And so that's why I really don't want to label cycle 4 as an expanding triangle, because it then would be much longer than its counterpart cycle 2, which is well off to the left of the chart, early in I think 2009 or sometime in 2008, I'm not sure. And I think it was a double zigzag, and so there's alternation between the two, but already the proportion isn't great. I wouldn't want to see it lasting longer. Okay, so let's turn our attention now to this 5-wave impulse for cycle wave 5. This first weekly chart labels primary 1 and 2 complete. My second weekly chart moves the degree of labelling within this down 1, and we'll look at the implications of that when we get to the end of the Elliott Wave analysis. Let's consider, what if primary waves 1 and 2 are over? They could be. Primary wave 3 may have begun here. This week I have moved the degree of labelling here down 1 to see intermediate wave 1 and now intermediate wave 2 over, considering the duration and depth of this downward movement. Intermediate 2 may not move beyond the start of 1. If this wave count is correct, then the next movement for the S&P should be a third wave at intermediate and primary degree, an increase in upward momentum, possibly with support from volume, and possibly for some of it, some increase in range, particularly toward the middle of it. An increase in strength with upward movement would be expected. This particular market has a tendency, quite a strong one, to have extended third waves. We may see intermediate 3 extended. Let's take a look at how it may be beginning at the daily chart level from this low down here, which is this point down here. Now we're zooming in on the middle of primary wave 3 with intermediate wave 1 complete, intermediate 2 subdividing perfectly at lower time frames is a very good triple zigzag. These aren't very common Elliott wave structures. It's one of the rarer Elliott wave structures, which is why I expected it was probably over here as a double zigzag, because it's a much more common Elliott wave structure. But I did have an alternate which expected intermediate 2 could continue lower as a triple. The main hourly or lower time frame wave count was invalidated, leaving the alternate which looked at it continuing lower as a triple zigzag. And so that's how I'm labeling it. It fits best at lower time frames. If it does continue lower, it may not move beyond the start of 1, but if I've got it labelled correctly with these subdivisions as a triple zigzag, then it shouldn't continue lower, because 3 is the maximum number of corrective structures within a multiple. My target for primary wave 3, the first target, is for it to reach only equality in length with 1. If this target is wrong, it will not be high enough. This is how I will approach target calculation for this market. As price approaches this target, I will look to see, is the structure complete? Could it end there? Is there any technical indication of an end to a primary degree trend? Or, if price approaches that target and either the structure is incomplete or it just keeps on rising, then I will calculate the next target using the next Fibonacci ratio in the sequence for primary 3 to reach 1.618, the length of primary wave 1. At the hourly chart level, let's take a look at this triple zigzag. A, B, C, the first zigzag in the triple is labelled minor wave W. The first and second zigzags are joined by a 3 in the opposite direction labelled X. ABC, the second zigzag in the triple, is labelled minor wave Y. Another 3 in the opposite direction labelled X subdivides as a zigzag and completes a counter trend movement. And then ABC, the third zigzag in the double, is labelled minor wave Z. If this is correct, then within the new upward trend of intermediate 3, no second wave correction, and minor 2 is yet to come, may not move beyond the start of minor wave 1 below the short-term invalidation point. It's not possible to see this as a leading diagonal 1, 2, 3, 4, 5, because this would be the third wave of a possible diagonal, and it would be the shortest out of 1, 3, and 5. So I can't see only minor wave A with an intermediate 2 over down here. And without a full change, another way to possibly try and label intermediate wave 2 could be A, B, C, with C to continue lower. That doesn't work either, because A would have to be a 3, this would have to be B, and B is less than 90% the length of A. So it couldn't be a regular flat A, B, C continuing lower, because B doesn't meet the minimum required correction of 90% the length of A. And so I've concluded, after trying all sorts of different possibilities for intermediate 2, from this high to this low, it's most likely to be over as a triple zigzag. When all other Elliott wave corrective, or when the more common Elliott wave corrective structures are all eliminated because they just don't fit, then what we have left must be, or is the sole way to label this downward movement, if it's complete over here, to meet all Elliott wave rules. And so if intermediate 2 is complete over here, it fits as a triple zigzag. And then intermediate 3 should have begun. The first target is for intermediate 3 to reach equality in length with 1, because it fits with that higher target at the weekly chart level, or is it at the daily chart level. And again, as price approaches this target, if the structure is incomplete and price just keeps rising, then I'd use the next Fibonacci ratio in the sequence for intermediate 3 to reach 1.618, the length of 1. Intermediate 3 may only subdivide as an impulse, and within it, minor 2 yet to come may not move beyond the start of minor wave 1. But what if we move the degree of labelling here all down 1 degree? Let's take a look. Here's that idea. Intermediate 2 could be continuing, but as a flat correction. Flat corrections have A waves which subdivide as corrective structures. The only corrective structure an A wave within a flat cannot be is a triangle. They certainly can be multiple zigzags or even combinations or flat corrections. Usually they're single zigzags. This one could have been a multiple zigzag. When wave A subdivides as a 3-wave structure, then a flat correction is indicated. And so in trying to see if intermediate 2 could continue further in Elliott wave terms, this is the only wave count at this stage that I've been able to see that meets all Elliott wave rules, and the implication of it is that we need more upward movement for minor wave B to reach the minimum required length of 90% the length of minor wave A. What other possible structure could intermediate wave 2 be? If wave A is over here, then as I've said before, it won't subdivide as a 5-wave structure, meeting Elliott wave rules. There's so much overlapping in here. If you try and label it as a diagonal, 1, 2, 3, 4, 5, 3 is the shortest, and so that's invalid. The conclusion is that if A is over here, it has to be a triple zigzag. When A subdivides as a 3, then it's either indicating a combination, a flat, or a triangle. We can eliminate a triangle because second waves do not subdivide with triangles as their sole corrective structure. We can eliminate a combination because we can't relabel this triple zigzag as wave W, because you cannot label multiples within multiples. The maximum number of corrective structures in a multiple is 3. To label multiples within multiples multiplies it beyond 3 and violates the rule. So the only allowable structure, or the only structure left that will meet Elliott wave rules, is a flat correction. In a flat correction, wave A subdivides as a 3. Wave B also must be a corrective structure termed a 3, and it has to retrace a minimum 90% the length of A, and the common range for wave B is from 1 to 1.38 times the length of A, and so B can make a new high beyond the start of A. The identifying feature of B waves should be weakness. They should have weakness from volume, range, momentum. At their extremes, they may exhibit some divergence between price and indicators. So this one may be expected to possibly exhibit divergence between price and RSI, possibly have weakness in volume, may exhibit divergence between price and the AD line. And when B is over, then C should be a 5-wave structure to move beyond the end of A. When B is over, we would have an indication as which kind of flat may be unfolding and how to calculate a target for C. For now, I'd expect the 0.382 Fibonacci ratio to provide support for intermediate 2 if it does continue further as a flat correction. At the weekly chart level, what if we move the degree of labelling here down 1 degree? Instead of primary 1 and 2, what if it's only intermediate wave 1 and 2? What if primary wave 1 within cycle wave 5 is incomplete? If that's the case, then we may have primary 1, primary 2, primary 3, primary 4 could be over. It's remained above primary 1 price territory. Primary 5 could be about to unfold, finding resistance again at the upper edge of this channel. This is now an Elliott channel, drawn from the end of 1 to 3 with a copy on 2. Intermediate 5 would be limited because here intermediate 3 is shorter than intermediate wave 1. The rule is wave 3 may not be the shortest out of 1, 3 and 5. It does not have to be the longest, it doesn't have to be longer than 1. It just can't be the shortest out of 1, 3 and 5. And so if wave 3 is shorter than 1, that tells us that in order for the rule to be met, wave 5 has a limit. It may not be longer than equality in length with 3. At the daily chart level, we're now zooming in on intermediate 1, 2, intermediate 3, 4, 5, and here's that limit where intermediate 5 would reach equality in length with intermediate wave 3 at 4.32. So for this wave count, we would have to see a primary degree trend change at or before this limit. We'll see how this one unfolds. If intermediate 4 continues further, as a flat correction or a triangle. It could be wave A of a triangle, could be over here, because one of the subwaves of a triangle should subdivide as a more complicated multiple zigzag. Usually it's a double zigzag, but it could be a triple and meet Elliott Wave rules. So if intermediate 4 continues further as a triangle, it may not move into wave 1 price territory below the invalidation point. Chart level this week completes a downward week, a slightly lower high and definitely a lower low, but it's completed as a doji. Doji can occur within downward trends. They are not as strong a warning within a downward trend as they are within an upward trend, but on its own, a doji is not a reversal signal. It's part of a reversal signal, but this one is not on its own a reversal signal. A slight decline in volume, price mostly fell of its own weight this week. Last week we had an increase in volume with downward movement, but I pointed out that that didn't necessarily mean we were going to get more downward movement, although we have, because here we have a big bearish engulfing pattern with support from volume, and yet it was followed by more upward movement. Here as well, a strong downward week with an increase in volume, followed pretty immediately by upward movement. And so this didn't mean that we had to see more downward movement, but we have. This week, on balance volume gives us a weak bullish signal bouncing up off support. The support line has held. It's now held for a reasonable time, and it's now got 3 anchors, and so there's a little bit more technical significance to the support line now. RSI is in neutral territory, plenty of room for price to rise or fall. I've been over the last couple of weeks why I'm not noting this divergence back here. I want to note this situation. If this develops again, then I would expect a bigger pullback or consolidation. When RSI reaches overbought and then exhibits bearish divergence between short-term swing highs, that's a little bit of a stronger signal than when it exhibits this longer-term divergence. It had longer-term divergence back here. You could have noted it back here, and yet price has just continued on up overall for some weeks. And so noting that longer-term divergence, if you tried to do that back here, would have led you in the wrong direction. So I'm not going to do that. I'm going to look for the shorter-term swing highs. ADX is declining this week. There's no clear trend. From back here, though, there is a really obvious trend, a long series now of higher highs and higher lows, but these pullbacks have meant that ADX isn't catching up with that. There's a bearish crossover this week. MACD can whipsaw, though. If it makes it a little bit clearer, then we may give it more weight, but I'm not going to give it too much weight this week. ATR shows a small increase as price falls for the last couple of weeks. That's normal behavior. At the daily chart level, this week here we had an 80% down day, followed 2 sessions later by an 80% up day, but this isn't actually the setup that we want to tell us that there's a low in place. It did come though with this morning star candlestick pattern, although the up day didn't have support from volume, so that did weaken the pattern. The setup I would want to see is a 90% down day and or 2 back-to-back 80% down days, followed within 3 or 4 sessions by a 90% up day and or 2 back-to-back 80% up days. And that is an indicator of a 180-degree shift in sentiment, which you commonly see about lows. This is not quite the setup here, and so that's a bit weaker. But given the Elliott Wave structure of a double zigzag and the rarity of a triple, I did give a little bit of weight to that. But that main view was invalidated this week as price continued lower. Support is held this week at 3725, and the last 2 daily candlesticks now have long lower wicks, not long enough to be hammer bullish reversal patterns, but when we see more than one of them, I do give it a bit of weight. This supports the view that support may here held, and we may have a low in place here. Upward movement lacks support from volume, but volume did end up being pretty heavy for Friday, considering prior upward weeks, just not as heavy as Thursday's downward day. ADX is indicating a downward trend. If that downward trend is, or that little pullback is just over, it won't catch up yet. It is a lagging indicator, but it is giving a strong bearish signal. But other indicators, particularly the AD line, aren't lining up with this, and so I'm not going to give this too much weight and expect a continuation and a much longer downward trend than what we've had. And so far, the last swing low back here does remain intact. There is still a series of higher highs and higher lows. That low remains intact. That's very important. ATR increasing as price falls, absolutely normal behaviour for this market. The last signal on balance volume gave was bearish, but it's a pretty weak one. There was only 2 anchor points for that line that was breached. RSI's in neutral territory, plenty of room for that upward trend to continue. MACD bearish, and stochastics in neutral territory still. What about breadth and market volatility? At the weekly chart level, this week we're getting a bullish signal from the AD line. Price has made a lower low, definitely a lower low, and a slightly lower high. It's a downward week and it's closed red. But breadth has increased. There was more advancing stocks than declining this week. Market breadth has shown an increase, and this is providing a short-term single week bullish divergence with price. And because this is also seen with inverted VIX, I'm going to give this weight. In conjunction with this long lower bullish wicks, I'm expecting that this is most likely, not definitely, dealing with a balance of probabilities as with all market analysis, technical and fundamental. It does look like, again, we have another swing low in place. At the daily chart level, for Friday, price has moved higher and the AD line has moved higher. Upward movement on Friday had support from rising market breadth. This is bullish. There is no new short-term divergence here. At the weekly chart level, price has moved lower this week. Inverted VIX has moved higher. Downward movement overall for the week did not come with a normal corresponding increase in VIX. VIX has declined. Here's VIX, it's declined. And this is inverted VIX. This is again a single week instance of bullish divergence between price and inverted VIX, supporting the view that we may have another swing low in place at Thursday's low. This week, VIX and VVIX have both declined. There is no new short-term divergence there. At the daily chart level, there is short-term bullish divergence here. As price made a new swing low, inverted VIX did not make a corresponding new swing low. And so it's not surprising that we've got upward movement for Friday. For Friday, there was no new short-term divergence at the daily chart level. For Friday, both VIX and VVIX have declined as price has moved higher. No new short-term divergence there. Week with your S&P analysis. I hope that all of our members are having an awesome weekend.